Right now, as we watch the ticker tape scroll, Datavault AI Inc., trading under the symbol DVLT, is sitting at exactly 1.78 USD. It is currently down about 0.10 points, representing a decline of roughly 5.32% in the intraday session. If you are tracking this on your Interactive Brokers stock trading screen or glancing at your Fidelity mobile app, this red number might instinctively trigger a stay away response. The expectation for a sub-$2 stock dropping 5% on a Wednesday is almost always negative. Profit-taking, a failed pump, or the slow leak of a business running out of runway. You might look at the chart and see the volatility, the sharp spikes followed by these dragging pullbacks, and assume this is just another AI wrapper company capitalizing on the hype cycle before fading into obscurity. That is the easy narrative. It fits the pattern we have seen 100 times this year. But the reality of what is happening inside Datavault AI is fundamentally different and far more aggressive than a simple rebranding exercise. While the market treats this like a speculative penny stock, the company is executing one of the most radical pivots in the history of microcap tech, transforming from a hardware-based audio component manufacturer into a central clearinghouse for the valuation and monetization of the world's most intangible asset, data. The drop to 1.78 USD today isn't a death knell. It is a volatility tax on a company that is attempting to financialize everything, from genomic sequences to gold deposits using blockchain rails. The volume we are seeing today is consistent with consolidation. After the massive spikes we witnessed recently, driven by the news of their strategic alliance with Scilex Holding, the hot money is rotating out. The day traders who bought the headline are selling the stagnation. This creates the downward pressure we see at 1.78 USD. However, if you look deeper into the order flow on a professional platform, you will notice that the bid density, the amount of buy orders waiting just below the current price, is surprisingly robust. This suggests that longer-term accumulators, perhaps those managing high-risk allocations within a Fidelity brokerage account or a diversified self-investing portfolio, are using these dips to build a position. They aren't buying the audio company of the past, they are buying the data refinery of the future. The expectation is that DVLT is still WISA Technologies, the company that made wireless speaker chips. The reality is that WISA is now just a legacy division, a cash cow meant to fund the new voracious data science division. This misclassification by legacy algorithms is the arbitrage opportunity. You are buying a data infrastructure play at the valuation of a struggling hardware vendor. To understand why this price point is so contentious, we have to talk about the pivot. Most pivots are desperate. A company fails at selling widgets, so they try selling software. Datavault's pivot is different because of the scale of the partners involved. The expectation was that they would slowly die off as the home audio market saturated. The reality is that they effectively reverse-merged a new business model into the public entity. By acquiring the assets and IP that now form the core of Datavault, they leapt into the real-world asset tokenization space. This is the hottest sector in crypto and finance right now. BlackRock is talking about it, Franklin Templeton is talking about it, and here is the small-cap stock, DVLT, actually doing it. They are building the tools to take a physical asset, like a copper mine or a pharmaceutical patent, and turn it into a digital token that can be traded. The intraday weakness today reflects the market's skepticism. Can they actually pull this off? It's a prove-it decline. But if you look at their recent guidance, projecting revenue to jump from a few million to potentially over 200 million by 2026, the market is currently pricing in a 99% chance of failure. If the probability of success is even 10%, the stock at 1.78 USD is mathematically broken. I want to challenge you to think about the data you generate every day. Comment below if you think companies should pay you for your data, or if you believe privacy is a lost cause. Datavault's entire thesis rests on the idea that data is an asset class, just like oil or real estate, and it needs a price tag. Let's dissect the Scilex deal, because this is the anchor for the bull case. Scilex Holding Company, a biotech firm, didn't just sign a partnership, they engaged in a massive financing agreement worth up to $150 million. For a company the size of Datavault, $150 million is not just runway, it is a war chest. The expectation when a small company announces a big deal is that it's fluff, non-binding MOUs that never materialize. The reality here is that tranches are already closing. We have seen Bitcoin being used in the transaction settlements. This is highly unusual and signals that DVLT is operating at the bleeding edge of corporate treasury management. They aren't just talking about crypto, they are banking in it. This aligns perfectly with their business model. By accepting Bitcoin and using it to strengthen their balance sheet, they are signaling to the market that they are a crypto-native enterprise. The 5.32% drop today might be partially correlated to the broader crypto markets or simply the digestion of the dilution that comes with such financing. But make no mistake, a microcap with access to $150 million in capital is a dangerous thing to bet against. It gives them the ability to acquire revenue, buy technology, and weather the burn rate that kills their competitors. We must also look at the acoustic science versus data science internal conflict. If you check the company profile on a site like Robinhood Investments, you might still see descriptions of high-definition wireless audio. This is the acoustic side. It features technologies like WISA and ADYO. It is real. It has customers like Bang & Olufsen and Harman, and it generates revenue, but it's low growth. The data science side is the rocket fuel. It uses high-performance computing to score data. Think of it like a credit score, but for a company's data. How valuable is your customer list? How valuable is your proprietary research? Datavault's AI agents crawl this data, value it, and then prepare it for monetization. This dual structure is confusing to the average investor. They see audio and think consumer electronics cyclicality. They miss the data side, which is pure software-as-a-service margin potential. The stock price today reflects the valuation of the audio business, with almost zero value assigned to the data business. That is the asymmetry. Let's talk about the numbers, specifically the growth rate. In their recent Q3 report, revenue was up 148% year over year. In some specific segments, growth was north of 400%. When you see a company growing triple digits, you usually see a price-to-sales ratio of 20 or 30. DVLT is trading at a fraction of that. Why? Because the market doesn't believe the quality of the revenue yet. They think it's one-off licensing deals. The expectation is that this is a flash in the pan. The reality, if you believe management's guidance, is that this is the start of a J-curve. They are guiding for $30 million to $50 million in 2025. At a 1.78 USD stock price, the market cap is hovering around the 500 million mark, depending on share count fully diluted. If they hit 50 million in revenue, they're trading at a reasonable multiple for a high-growth tech stock. But if they hit the 200 million target for 2026, the stock is trading at roughly 2.5 times forward sales for a company growing at hyper speed. That's absurdly cheap in this market environment. The risk, of course, is that management is hallucinating these numbers, but the Scilex deal provides the capital to buy the revenue if they can't build it organically. Now consider the technical setup on the chart. 1.78 USD is a precarious level. It is testing the support established during the consolidation of the last 2 weeks. If it breaks below 1.70 USD, we could see a flush down to the 1.50s as stop losses triggered by robo-advisors in Schwab Intelligent Portfolios or similar algorithmic accounts get hit. But the Relative Strength Index, RSI, is cooling off. It was overbought during the run-up to $2, and now it's resetting. This reset is healthy. It allows the stock to build a base. The Bollinger Bands are tightening, which usually precedes a violent move. Given the news flow, the closing of financing tranches, the new licensing deals, the probability of that move being upward is significant, provided the broad market holds up. But you have to be prepared for the flush. This is not a stock for the faint of heart. It's a venture capital-style bet in public markets. There is also the tokenization narrative to explore. This is the blue sky potential. Datavault isn't just valuing data, they are tokenizing real-world assets. Imagine a mining company that has $1 billion of gold in the ground. They need cash to dig it up. Traditionally, they would get a bank loan. Datavault proposes a different path: tokenize the gold in the ground and sell the tokens to investors. The investors get a claim on the future gold, the miner gets cash today. Datavault takes a fee and a royalty on the data flowing through the system. This is a trillion-dollar market opportunity. If DVLT captures even a fraction of a percent of the RWA market, their current stock price is a rounding error. The expectation is that this is sci-fi finance that will never pass regulatory muster. The reality is that regulators in jurisdictions like Switzerland, Singapore, and increasingly the U.S.